Have you ever wondered how a company could go from being one of the most respected corporations in America to becoming a symbol of corporate fraud and corruption? Today, we delve into the rise and fall of Enron, a story that shook the business world to its core. Enron Corporation, once a darling of Wall Street, began its journey in the late 1980s. Kenneth Lay, the former CEO of Houston Natural Gas, merged his company with Internorth, a Nebraska-based company, to form Enron. They had a dream of creating the largest natural gas pipeline in the nation, and they did. In the early 90s, Enron was making waves. The company was innovating, transforming the way energy was bought and sold by creating a market for energy futures. This was a game changer. It allowed energy, a commodity previously sold at a regulated price, to be traded in an open market. This move revolutionized the energy industry and propelled Enron to new heights. At the turn of the millennium, Enron was riding high. They had become one of the largest companies in the United States and were named America's most innovative company by Fortune magazine for 6 consecutive years. However, beneath this glittering exterior, a major scandal was brewing. In 2001, a series of revelations began to unravel the Enron myth. It came to light that Enron had been using accounting loopholes and special-purpose entities, often referred to as shell companies, to hide losses and debt from their financial statements. This painted a false picture of financial health and profitability, misleading investors and inflating the company's stock price. The man behind this complex web of deceit was Chief Financial Officer Andrew Fastow. He masterminded a scheme where Enron would sell poorly performing assets to the shell companies at the end of each financial period. This made it appear as though Enron was making a profit, when in reality, they were incurring losses. When this scandal broke, it sent shockwaves through the business world. Enron's stock price plummeted from a high of $90 a share to less than $1 in less than a year. Thousands of employees lost their jobs and pensions, and investors lost billions. The Enron scandal led to the dissolution of Arthur Andersen, one of the largest audit and accountancy partnerships in the world. The firm was found guilty of illegally destroying documents related to the Enron audit and was effectively put out of business. In the aftermath, several high-ranking Enron officials, including Kenneth Lay and Andrew Fastow, were prosecuted and found guilty on numerous charges, including fraud, money laundering, and conspiracy. The Enron scandal serves as a stark reminder of the dangers of unchecked corporate greed and the importance of transparency in business. It led to significant changes in corporate governance and financial reporting standards, including the Sarbanes-Oxley Act of 2002, which increased penalties for destroying, altering, or fabricating financial records. In summary, the rise and fall of Enron is a tale of ambition, innovation, and ultimately deception. It's a story that underscores the importance of ethical business practices and the dire consequences when they are overlooked. It's a story that continues to shape the business world today, reminding us all of the value of integrity, transparency, and accountability.